Hello guys, I'm ATP and welcome back to another episode of our testing indicator series. Today we'll be testing a new version of the MACD called the Zero Lag MACD. This version claims to outperform the traditional one by reducing lag and providing quicker signals, and so today we'll put it to the test. But here's the twist: after testing the Zero Lag MACD, we'll also test the standard MACD under the same conditions and then compare the results to verify which one is really more profitable. Let's get started. Before we begin, if there is an indicator you would like me to test in a future episode, drop it in the comments or share it in my free Discord community. The link is in the description, don't miss it. Now let's set up the Zero Lag MACD on the chart. I will be using TradingView, but feel free to use any platform you prefer. Let's click on Indicators, then type Zero Lag MACD, and you have a lot of options to choose from, but I'm going to click on this one. By definition, this indicator works by reducing lag, allowing you to detect trend changes faster than the standard MACD. It is displayed in the form of a histogram with two lines, just like the standard MACD, but with less delay. In this case, the signal and the MACD zero lag. However, for today's test, we'll focus fully on the histogram to take trading signals. Let's tweak the settings. For the fast length, I will use 34, for the slow one 52, and for the signal 21. Finally, we will disable the lines in the style section, as we will base our trades on the histogram turning green for long positions and red for shorts. If you prefer to see the signals directly on your chart, you can use my custom version of the Zero Lag MACD. It marks the exact entry points directly on the chart, making it easier to trade. Although this version isn't published on TradingView, you can use it for free. Simply go to my Discord community using the link in the description, head over to the free materials channel, and there you will find the code. Now that we understand how the indicator works, it's time to backtest it. We'll define three key components for this: the technical system, the risk management rules, and the testing conditions. The technical system will include using the Zero Lag MACD with a 200 period exponential moving average that will act as a baseline, to make sure we only enter in positions that align with the prevailing market trend. Here you have an example of a long position where the price is above the 200 EMA, and here you have a short trade example where the price is below the baseline. For the risk management, I advise you to use the ATR bands indicator, this one here, with a multiplier of 2, a special indicator that places the stop losses on your charts according to the market's volatility. The lower band is used to set the stop losses for long positions, like in this trade, and the upper band is used to set the stop losses for short positions, as you can see. Then, for the take profits, I will close 50% of the trade once the 1-to-1 level is reached and place my stop loss on the entry point. Then, I will stay on the trade until the Zero Lag MACD gives an opposite signal, like in this trade. This will ensure I protect my trades earlier and then scale my profits with a simple method. As for the testing conditions, we'll backtest the Zero Lag MACD on 4 different time frames. On the 5-minute for scalping, 30 minutes for day trading, 1 hour for swing trading, and daily time frame for position trading, using data since January 2023 until January 2025 across a diverse asset portfolio including Bitcoin, Euro USD, gold, the S&P 500 index, and the Apple stock. And now, with everything set, let's dive into the backtesting process. As always, manually backtesting thousands of trades will take too long, but I will be using my indicators testing bot to automate this. It logs all trade entries, exits, and stop losses with precision, making the backtest process efficient and accurate. This tool has been extremely helpful for over 200 users who want to optimize their strategies. To learn more about it, visit algotradepro.com, where you will find a full guide and other valuable tools for your trading. And so, let me run the backtest for the zero lag MACD and I will be back with the results.
A few minutes later.
After testing about 7,000 trades, here we have the results of the zero lag MACD, where the best time frame was the 1 hour one with a profit over 200%. But before diving into its results, let's do the same backtest, but this time with the standard MACD to see how it performs under identical conditions. We will use the same strategy, 200 EMA as the baseline, ATR bands for stop loss, and the same take profit method. I will also use the same settings, 34, 52 and 21. On my bot, I just need to change the C1 indicator to the MACD and click on OK. And as you can see, it performs the new backtest in seconds. So I will quickly get the results from all assets and timeframes and I will be right back.
A few moments later.
After testing the standard MACD with the same conditions, we see some significant changes. And to simplify the analysis, I will compare both equity curves. Let's start with the 5-minute one. On the left, with an orange color, you can see the equity chart from the zero lag MACD. And on the right, with the blue color, the one from the standard MACD. And in this case, it's easy to conclude that the one on the right is far better from the one on the left. And I remember that these equity curves are calculated based on all the trades from the 5 assets we used on our test. So 1 point for the MACD and 0 for the zero lag. Next, on the 30-minute time frame, although both equity curves are profitable, the one from the MACD was more stable than the one from the zero lag. Also, here we achieved the profit around 100% and on the right a profit above 200%, so 2 times greater. Another point for the MACD. Then, on the 1 hour time frame, things look different, because the equity chart from the zero lag was more stable and profitable than the one from the standard MACD. 1 point for the zero lag and 2 for the MACD. Finally, on the daily charts, although the number of trades analyzed were lower, the results from the MACD were more stable and profitable. So 3 points for the MACD against 1 point from the zero lag MACD. So, while the zero lag offers some advantages, mainly on the 1 hour time frame, it doesn't outperform the standard MACD across the board. The results highlight that newer isn't always better. It's crucial to test and analyze before adopting any new tool. After evaluating the zero lag MACD alongside other indicators in this series, I've decided to place it in this position on our ranking table. Tell me in the comments if you agree with this position or not. This updated table is also available for free on my website, providing a comprehensive overview of all the indicators tested so far. Simply click on the free content option, scroll down a little bit and click here, where you can find all these details. And that's it for today. Thank you for watching and I will see you in the next episode. Bye bye.